the task, the business objectives, innovation management, and you also take into account the financial stability and profits of the business, which are there in the within the business, right? So most financial plans will kind of segment it or break it down for further elements so that it could be managed well and you can recognize it better and manage the financial sides of it. So what are these areas? So you need to look at planning your finances, you need to look at controlling, you need to look at organizing your finances, you need to look at directing and also decision making. These are the key elements in financial management. So as you know, financial management is very important for any organization, even for a not-for-profit organizations. Financial management is important because you need to have funds to run even a service organization, an NGO, any kind of organization. You need to have a good financial management. Okay, I'm sure everyone will agree with that. Okay, now I have to show you this, but unfortunately, there is a problem with this little audio. So I'm going to show it to you on a separate Chrome window, right? 1 second, I will play it. And we will go back to our slides.
If you don't have control of your finances, you don't have control of your business and the fate of your business. Financial management deploys funds optimally towards hiring talent, paying suppliers, investing in R&D, and other initiatives that will drive profitable customer acquisition and retention. Effective financial management can help your business operate smoothly without running out of cash, improve profitability, and prepare for long-term sustainable growth.
That's just a small introduction about financial management. So you can see the importance of financial management, right? Because you need to have good finances.
In this video.
Oh, 1 second. 1 second. Sorry about that. It just automatically went into the next video. All right. So what are the elements? Why is financial management important? If you don't manage your finances properly, what will happen in terms of obtaining profit? Will you be able to obtain maximum profit? Maria, you'd like to answer? Why do you like to answer? If you don't manage your finances properly, will you be able as a company to obtain maximum profit? Why do you need finances? Anyone would like to answer can raise their hands. Student Miruka, you have raised your hand. Do you like to answer the question? Yes, Dan.
Yes, good evening, madam.
Good evening.
Madam, financial management is very important because without managing the finance, that it will be very difficult to run the business. It might be go down if we not manage the finance well.
Yes. So it's very important.
Yes, ma'am.
Yes. Thank you, Dan. You're absolutely right.
Sir.
So you need to plan, you need to budget properly. It's very important that you plan out to budget properly, effectively. Otherwise, If you don't manage your finances properly, you will not be able to run your business efficiently, right? When I say run your business efficiently in terms of making a profit, gaining all those competitive advantages, or even resource allocation, you won't be able to do that if you don't have proper finances, right? So you need to understand what are the steps when it comes to financial planning. There are steps that you have to take and make sure that it's aligned with the objectives of the business. You need to know what are the objectives of the business. Based on the objectives of the business, you have to align your financial planning. So every business has a goal, right? Isn't it? Every business has a goal. It could be to get maximum revenue, or maybe in terms of growth, it want to gain a big market share, maybe get a lot of profits. But everything will need a step-by-step process in terms of managing your finances for each of these, right? So for example, if you want to grow your market, you might have to do more promotions, you might need to maybe do some product development. For all that, you need resources, finances, you need funds. So therefore you need to plan your finances properly, right? You need to budget, you need to maybe these are the things that you might need to do. You might need budgeting, you might need to allocate certain responsibilities to people who can manage the finances properly. You might have to do some customer research and so much more, right? But whatever you do, for all this, you need good financial management, right? So it's also known as a process of identifying the capital, what is required in order to achieve or accomplish the business activities of the organization, right? So maybe in terms of assets, it can even relate to the assets or investments, and also organizing the funds of the management, right? In the process of this, you will be formulating goals, you may be formulating policies, you may be formulating procedures, methods, or even programs, budgets that are very much in close connection to the organization's financial activities. We do all that to manage or plan our finances properly. So this financial planning has steps, right? There are 6 steps. There are 6 steps involved in this, right? Look at these 6 steps. Now, anybody who is already in some kind of financial management would want to share your ideas here. That would be great if you can share your ideas. Please raise your hands. First, you need to identify the current financial situation. Then you have to develop the goals. What are the financial goals? For you to develop goals, you obviously need to understand your current position. Where are you now? Where's the company now, right? Then are there any, once you develop the goals, are there any alternative actions which you need to take? Any other actions that you need to take? Then you have to see, when you have few options, you always see, you have to see which one is the best option. So you have to evaluate the alternatives. That's what I mean by evaluating alternatives. Now listen carefully. I'm going to call out your name and maybe ask you to respond to a question just to see how well you have understood. If you have any ideas to share, please share with the class, right? You also then, after you evaluate, you will be creating and then you implement these action plans. Once you implement, are you going to forget about it? No, you have to reevaluate. You have to see whether your plans are in place, maybe make some adjustments. That's what we call revise the plan. You make adjustments and move forward, right? So anyone would like to answer this question? Marjorie is there, Jesu is there, Cheryl is there, Vivi is there, Yogeswaran is there. I'm just going to ask any of you all, what are the 6 steps involved in financial planning? Can you explain it in your own words? The 6 steps are given here, but what do you understand by these 6 steps? Anyone who like to answer can raise their hands. I'm waiting for you all to raise your hands. Marjorie, you like to answer that question?
Hello.
Hello. Hi, Marjorie.
Hi, good evening, ma'am.
Good evening to you.
You want me to explain the
Yeah.
six-step process?
Yes.
Oh, okay.
May you
First,
understand.
determining the current financial situation. I think from my own understanding is like you should know if your savings is enough for building a business. And then second is developing financial goals. If you have goals, you should, I don't know how to say like this. Like you should know how to financial goals, developing financial. You should know how to develop is and then
Very good.
the
You need to understand what the goals are. So when you figure out where you stand, you can understand where you are at the moment and where you want to be. Based on that, you develop your financial goals.
yes. And then
Okay.
the third one is identifying alternative courses of actions like in the present if the first plan is like failed, you should have plan B.
Mhm.
That's what I understand, or alternative courses.
Yes, you
And then
have few options.
options like that. And then the next one is evaluating alternatives. You should know which one is, which plan ABC like that, which one is suitable for your goals, which one
Yeah.
much better like that. And
Yes.
then for next is creating and implementing financial action plan.
Yes.
And creating and implementing. You should know how to create and when to implement that kind of goals that you are planning.
Yes.
And then the last one is reevaluating and revising the plan. Reevaluating, I think you should know how to you should study more your goals or your plan, and you should think about if it's have failure or have mistake. You should know how to more revise, repeat and repeat like that. That's
Yes.
how
Thank
I
you.
understand.
Thank you, Marjorie.
Thank you.
Yes, Ceciline, you
Um,
like to, Ceciline, you can answer. Yes. Yeah, I can hear you very faintly. Can you speak a bit loud?
Okay. Maybe I will remove my.
I'm sorry, we can't hear you.
Okay.
You'll have to speak a bit loud.
Yeah, okay. Can you hear me now?
A little louder, maybe. Okay, we can hear you laughing, but we can't hear your words.
Can you hear me now?
Oh, now better. Yes.
Okay. I will give you a good example. Because right now I am working in a rehabilitation center, which is becoming a medical center. First, of course, we are already established as a rehabilitation center, so our current financial situation is good. So this one is checked. And after that, after checking the financial situation, we are developing the financial goals. What is our goals? And our goal is to become a medical center. So
Yes.
after that, we identify all the actions that we need to do to become a medical center. So we renovate, we make our center better one, bigger one, and we giving and offering a lot of services instead of just a rehabilitation center. And then after that, we evaluate again which other alternatives we have to make after this. And then we did also like in marketing, we have a marketing plans as well, how to market our services, our offers. We did some videos just to post it in our social media. And then after that, uh, they checked again, they reevaluate everything and revising all the plans if it's fixed and if it's good already. Then we called up the health authority to come and checked and evaluate if we can pass. And in God's grace, we pass everything because we follow all this 6 steps process, and we
Yeah.
became a medical center now.
Yeah, good.
Yeah.
Thank you for
Yes,
sharing.
ma'am.
Yes,
Yes,
so
madam.
yes, thank you. So let's look at what we discussed in terms of financial planning process, right? So under this, we also need to talk about financial controlling. We have to, whatever we do in terms of our funds, we need to have proper controlling, right? You need to establish certain measurements or maybe KPIs and follow them and measure your progress against the KPIs, right? It's not about always cutting costs. When you say controlling, a lot of people understand it as cutting costs, but it's not always about cutting costs or redundancy, but you have to set certain quantifiable measurements and lead the way, right? That way you can reach your goals, you can reach your organizational goals, right? It's also very important that you inform the staff about these goals and their role in achieving these goals. So for example, what are their responsibilities, right? So that's part of the controlling process. It's not about cutting cost and getting rid of paper, right? So it's critically important. Another critically important activity is you have to meet the business objectives. Why are we doing all this controlling? Why are we planning? We're doing all that to meet the objectives of the company, right? So financial controller or financial control should answer these questions. Are assets being used efficiently? If your assets are being used, you check that out, right? Find out, do you have machines which are just idling? Then it's not being properly utilized, right? You need to take action, you need to take control. Are the business assets secure? Are they in secure situations, right? I mean, secure in terms of if you lease them out, have you been paying the lease on time, right? Or have you obtained a loan for these machines? Is it being paid on time? Is it securely placed? Security comes in so many different ways. All those things you need to think, because these are assets for the organization, right? And does the management act the best interest of the shareholders and in accordance with the business rules? Are the stakeholders or is the business trying to fulfill the needs of the shareholders? Are they trying to make a profit and give whatever shares to the shareholders, to the investors? That's done, then great. So these 3 key questions you need to ask yourself in terms of controlling the funds of the organization. So there are procedures, there are certain policies that the organization follows, right? Which they follow, they will monitor, they will control what is the direction, what is the allocation and use of these financial resources, right? So it's the very important aspect of the organization. It's actually a very core of the resource management and in terms of operational efficiency. So for example, if you don't manage your finances properly, I would say the operations will not happen efficiently as well, because the financials are not properly utilized or it's not controlled. But supposing you have bought a machine for the organization and it's just idling around, the assets are not being used. You have used it as a capital investment, but it's not utilized. So that's a problem, right? So understand, it's very important to understand that this resource management is also very important, because for resources, you have to spend your funds. So what are the required processes? You have to detect overlaps or any anomalies, timely updating, analyzing all possible operational scenarios, forecasting and making projections. This is one of the key things in financial management or control. You need to forecast what will happen in the future, forecast maybe a profit, a growth, future projections. You have projections when you're budgeting and all, you need to have a good idea about projections. So these need to be done. Then in terms of organizing and directing, you have to organize your resources and decide how you are going to direct or allocate responsibilities, right? So resources are not only physical resources, right? This includes staff as well. You need to, even if you have a proper budget, finances allocated properly as per the plan, you need to make sure that the right person is in charge, the staff, the responsibility, the right person is taking responsibility, right? Funding, technology, software, all of that is considered as tools, resources, right? So much. It's not only the assets, it's not only the physical aspect of it. Remember that, right? So you can't simply start a business by implementing a strategy if it does not even have all the resources at the ready to get the ball running. Isn't that true? If you have a nice strategy planned out, but you don't have the resources, how can you organize and direct? You can't do that. So you need to organize your resources, your staff. If you need technology, you need to have that. If you need IT facilities, you need to have that. If you need staffing, if you need outsourcing services, you need to get that. If you need to have a good budget, you need to get that. Then only you can take your strategy and put it into practice. Otherwise, it's difficult to put the strategy into practice if you don't have funds. For everything, you need a capital. Capital is not necessarily finances. It could be all like human capital as well. This will also lead to decision making. Right? What is decision making? What do you understand by decision making? Can someone answer that? Yes, Dan?
Yes, ma'am. Decision making is before making decision, we have to study very, very nicely whether it is good or not good. So after that only we'll make the decision, madam.
Yes, thank you, Dan. Thank you. Very good. So in, Salaria.
Good
Hi,
evening.
Salaria. Good evening.
Yeah, for me, decision making means it's about the decision that we have to take, or we will collect some opinions or suggestions, something like that. If it's a company, we will sit together with some of the board of directors, something like that, and then we will collect and gather the decisions or opinion of each and everyone, and then after we finalize it, and then that's the time that we will make the decision.
Yes. So in order to make, you need to make good decisions, good business decisions. Very good, Salaria. Thank you. You need to make good business decisions. In order to make good business decisions, you need to have proper information. You need to gather all the information, right? And then you need to show you alternative solutions as well. Take a step-by-step decision-making process. Look at the alternatives and come to make a final solid decision, because your decisions will also have an impact with your planning, controlling, organizing, all that final thing. So you have to make the right decision as well. Make sure that you make the correct decision in order for you to move forward as well. So one of the key things about financial decision is that it is very much linked to investment, financing and dividends. We know that. Why do we run a business? To make profits. Why do shareholders or people invest? because they want dividends, right? People invest also because they want a profit out of it. Okay, so investments must be financed in some way, right? So if someone's trying to invest in your business, it has to be financed in some way, right? There can be always other alternatives in terms of financing. Look at this. Raise finance from selling new shares. That's one way of obtaining finances, or borrowing from banks, or taking credit from suppliers. These are ways that you can increase your finances, right? So, but the key decision is whether profits earned. That's the most important thing. Once you find a way to invest in your business, you have to find out whether you're making profits, okay, by doing this business. And then you need to find out, are you going to retain it, or are you going to distribute it to the shareholders through dividends? So if you are paying high dividends, the business can be starved of funding to reinvest in growing the revenues and profits further. So that's a key decision you have to make, right? Are you going to reinvest it to make more profits, or are you going to pay high dividends to the shareholders? See, therefore, you need to have alternative solutions. You need to have a lot of information in order to make a proper decision in this case, in a situation like that. So now we're going to look at the steps in financial planning process, right? First, you need to find out the current situation. So someone, I can't remember, one student explained it. You need to find out what is the current status of the business. What are the costs? Do you have any liabilities? Does your business have any assets? Do you have any loans? What are the credit or receivables that people owe you money, and do you have any debtors? Then you develop a goal, a financial goal, right? What you need to achieve, that should be understood, right? Then you need to set your specific goals, and in terms of how the current income will be spent in order to provide funds for investment for securing a future financial security. How? You have to see what your current income is and how you're going to spend it, right? That is one of your financial goals, right? How are you going to reinvest it, right, for your profits to grow? So that's a key decision you'll have to make. Then you look at any other alternatives. Are there any other solutions? Alternatives means other options that you can take, right? So this means it will also have an impact on actions or expanding the current situation. Then are there any new course of actions? Is there creativity in your decision making? And you have to, in return, consider all the possible alternative solutions which can lead to a more effective decision making. Once you have identified the alternative actions, you evaluate them, you compare them, right? You consider them. What are the conditions in terms of the business activities will be performed? What is the value for the organization and the current economic conditions within the environment? So you have to evaluate, right, which one's better. Then you create and implement a financial plan. Once you evaluate, you create and implement an action plan. Remember, we discussed this. Once you implement it, you're not going to forget about it. You have to reevaluate after some time. Then you might have to do some revision to that as well and further improve it. That is one of the most important things. When you implement a plan, you have to always reanalyze it and see whether it's good, whether it's working as per whatever the measurements you have given, right? Okay. Now I want to ask some questions. Christina, are you there? You can answer if you like. Cheryl, if you like, you can answer. What do you understand about reevaluating and revising a plan? Rhoda, you can answer. Rhoda, you can answer if you are ready. You can unmute and answer. What did you understand by reevaluating and revising a plan? In financial planning process. Okay, Rhoda has unmuted. Good evening.
For my own understanding, ma'am, evaluation or writing the plan. mm,
Yes.
how to say this one? Revising the plan, you need to double check the plan before you implement. I mean, so you check if it's okay already, uh, or there are something you need to change before you
Move further.
uh,
If there are any additions or changes that you need to make, you might even
yes.
look at those options as
I'm
well.
so sorry. I'm just
It's
yeah,
okay.
really.
Thank you for attempting to answer. I appreciate that. Solaria, you like to answer that? Cheryl, if you're ready, you can answer. Why you got up and went, so that's why I didn't call your name. Lynn, you
Yeah.
went, that's why I didn't call your name.
What I understand about reevaluating and revising the plan is something like similar with what Rhoda said, that reevaluating will go over again the plans. We will check our plan, our mission or vision of our or other purpose, and then our objectives in the company, and then if we will reevaluate our plan, if it will work that way, and then if we can find out that something in our plan is not working, then we have to revise for a better result.
Yes. Good. So how does financial planning help managers? It will help you in achieving organizational goals. How? They will answer these questions. How much funds in short term, long term does the organization needs? So in financial planning, the manager needs to know how much of money is required for the business. Where will the funds be from? How are you going to get? How are you going to source these finances? And how is the organizer going to use these funds? Right? So these key questions will help the manager in allocating the finances properly. Basically understanding how much they're going to require, how are they going to get it, and how are they going to disperse it, how are they going to use it, right? So this information basically helps in identifying the amount that is required, how are you going to run it, and from where you will get the finances, whether you are going to borrow it, whether you are going to get it through investment or whatever. You have to use the money rationally, for the use of the business. So the plan gives an indication of the sustainability of the organization as well. So when you look at a financial plan, it should include, yes, Lynn?
I was thinking about financial planning, but when we should do the planning for the old company and for the new company. That's what I would like to ask.
So if it's like this, when you start off, even when you have a strategy planned, you need to have your financial, the funding part at the initial stage. And it's not something that stops at the initial stage. Now, let's say you have a strategy, you have a new business, you have a strategy, right? Right? Now, for that strategy, how are you going to gain the funds? Therefore, you need to have a financial planning at the beginning of starting a company, ideally. That's very important. And then you need to monitor it. Remember, I spoke about monitoring it, evaluating it, set some measurements, and you have to keep monitoring it, because it's not something you can plan at the end, at the beginning, and forget about it. Constant measurement is very important. You have to set certain standards, measurements, KPIs, and check. You have to evaluate how far you have gone. And when you keep measuring it, when you keep evaluating it, you will find out if there are any bottlenecks, if there are any loopholes rather. If there are any loopholes, you will identify. So if it's an ongoing business, one of the key things is you will have to see the financial stability of a company which is already established, right? So you need to run an audit to see what is the current financial status of that company. Thereby, you will get an idea about the current status. Then you need to, that is your current situation. Then you set goals. What do you want to achieve from this point onwards? What do you want to achieve? Maybe the company wants to grow the business, right? Maybe the company wants to enhance, grow their market share. That is one goal. So how are you going to do this? Maybe you might have to promote your product. In order to promote it, you might have to invest you might have to invest money. So therefore, you look at investing. That is a financial goal that you need to achieve within, you have to give a time scale as well. Then you have to decide from where you're going to get the money. Are you going to use the profits which you have already gained from your company? You're reinvesting it to gain more profits. Isn't it, Lynn?
Yes, because I was also thinking about that when we do the planning, the financial planning, for the new company, that they have to start the planning when the company it goes to operate. But for the company, let's say that it has been running for many years, and then what I was thinking that whether they should start at the beginning or before the beginning of the year, and when they do the planning, so it's monthly basis or whether the whole year. And then when we have to check whether we are over spending or the spending of the funding. So those kind of things, because
Yeah.
Yeah.
So, like I said, at the beginning, any company will have a financial planning right at the beginning, right? So if it's a company
Yes.
which has been running for some time, maybe they have a financial budget, a financial year. At the end of the year, you will have certain measurements, right? What are the profits? What are your expenses? You will be looking at your balance sheets, your income statements. You will get an idea how you have spent the money and what you have earned over the years. That is your current situation. Analyze your current situation. So that could happen, Lynn. I mean, it could happen. It depends on company to company, right? So maybe
Yes.
yearly, quarterly, but very frequently, it's better to have a audit. You have to do an audit to find out the financial stability of the company, because it's very important to know how the money is coming and how you're spending it as well. So your statements, every business has a statement, balance sheets and income statements, those basic accounting details, they have access. So does that answer your question?
Yes, exactly.
Okay. So what you
Thank
wanted
you.
to know whether it's done at the beginning and then whether it's carried on. So it's a continuous process. It's a continuous
Yes.
exercise which you need to do. It's not something, I think any business is like that. For any industry, they do that. Even NGOs, they need to have their financial planning and their processes clearly set out, because that's how an NGO will gain their funds. Anybody who's planning to fund for them? 1 second. Okay. So it should include these 3 key components, right? What we call the income and expense document. You need to have the balance sheet. You need to have statement of cash flows as well. 1 second. Okay. Right. So let's look at these individually. Okay, one by one. What is an income? What is a statement of income? It basically, everyone knows about the statement of income, right? Yeah, Solaria, you're smiling. I know you know what it is. So it's a document which records all the income and expenses of an organization, right? Solaria, you know what an statement of income is, no? Share your ideas. What does it mean? You run a business of your own or you work somewhere?
Yeah, I'm working somewhere.
Okay.
Yeah, statement of income. What I understand about the statement of income is something like a record or any records that are being gathered or being done by a certain individual who is assigned in that area, and then they will record that income. What income is the from the root word income in the prefix in. It means to see the finances that is coming in within the company. So it must be recorded every details of that. Who is the source, who gave it that one, the time, something like that. So it's the record must be in detail. So it says a statement because it's
Yes.
really detailed
Yes. Thank you.
report about the uh, funds that come in the business.
Yes, thank you. So these are the very good. Thank you. So these are the things which are there in a statement of income. You will have income, result from all the sales of products, whatever the income that has come into the company. What are the expenses? Operating expenses, then supplier costs, maybe interest, salaries, loans, all of that. The expenses are also recorded there. Then production cost is recorded there. Then gross profit, sales minus all costs related to sales, that's called the gross profit, that is also recorded there. Then you have operating profit, profit of the organization after deducting of operating costs from the gross profit. The net profit, the total income minus the total expenses. The net profit before tax, amount of profit before payment of the contributions, and net profit after tax, net income minus contributions and taxes. So you have like a clear idea what is your profit before tax and after tax. So these information is generally included in the statement of income. So it's an organization of all the information. Then you have something called a balance sheet. What does the balance sheet include? Now, the balance sheet, you will have information about assets. You can have information about your liabilities of the organization. And this is called a balance sheet. Why is it called a balance sheet? Because there has to be a balance between assets and liabilities of the organization. This is very important for an organization because it actually shows the financial position in a certain time and what it actually owns. So what are your liabilities and what are your assets? What is the assets of the company? So it gives like an annual picture of the business's finances in an organization, right? When you look at the balance sheet, you can get an idea about what is the financial position of a company. Then these are the information that you will generally see in a balance sheet. You will see current assets. You can see fixed assets. You will see liabilities. What are liabilities? Short-term liabilities, payments for salaries and fees, and maybe payments from bank accounts, payments of taxes, all of that. You will also have long-term payments, like payments for liabilities on loans or maybe bonds at the end of the year. You can also include, it will also include capital investments and retained net worth of earnings for future investments. Then you can have, what are the current assets? Like current assets are things like cash, inventory, bank accounts, any movable assets. Fixed assets, things like equipments, buildings, land, other immobile assets, things you can't move. So we call them the fixed assets. So these are the things that you will see in a balance sheet. Okay, Cheryl, tell me a few things that you will see in an income statement and a balance sheet. What did you see in an income statement and a balance sheet? Okay, I'm going to ask you to unmute. If you're okay, you can unmute and speak. We can't hear Cheryl.
Okay. Hello.
Hi, Cheryl.
Hello. Can you hear me, ma'am?
Yes, I can hear you. You're from
Okay.
Philippines or
Yes,
from Singapore?
I'm
Philippines. Okay.
Philippines currently working here in Singapore.
Oh, okay.
Okay. As I understand the difference between statement of income and the balance sheet. In statement of income, uh, here we can see, or it contains, it's all about the income or the in and outs of the products, the expenses, the gross. Uh, uh, it's it state all about the money.
Mhm.
Uh,
And what does a balance sheet have?
the balance sheet is that it is the out it is the financial that or financial or the money that we use to, or it is the cash that we use for example is for paying the employees, or we need to
Oh,
use for
okay.
the
Those are
capital.
actually, those are not in the balance sheet. Those are all in the income statement, right?
Okay.
The balance sheet will include things like the current assets, the fixed assets, things like that.
Yes,
Yeah,
madam,
okay.
yes,
So that's
yes,
your,
okay.
you were explaining the income statement. So the
Yes,
balance sheet will have, these are the things that will generally you will see in a balance sheet, right? Thank you, Cheryl. So the next one is cash flow statement. What is a cash flow statement? What is a cash flow statement? Okay, so cash flow statement is it shows the amount of money which are expected to be made and invested in the business in a specific or a specified time. So we call that the cash flow statement. So it will include the information like this: cash inflow. So how much of money is expected to enter based on projected sales and incomes on the bank accounts on other basis. Like cash outflow is what is expected cash expenses on all basis. So basically inflow is what is expected to enter into the company, outflow is what leaves the company, right? Then you have to also identify any overlaps, any anomalies, right? So it will present any performances or operational picture of the business, important to sort of detect any overlaps or any anomalies arising from the data available. So you can identify if there are any issues, existing loopholes in the management framework, and then you can eliminate those or fix those problems by detecting these overlaps and issues. You need to always update this timely, right? So controlling finances is the key thing when it comes to managing your resources. So very important that if you want to manage it well, you have to update it constantly. On time, you need to update, right? Because it will have an impact on your overall operation efficiency, then profitability of the business as well. So you need to update it constantly, because if you have outdated information, it's not going to be useful for the company. So updating all these things, these practices that the company follows, like management practices and policies concerning the existing financial control methods, is also very important, because sometimes the company has implemented certain management practices and policies which may be outdated. So you need to update those as well, so that the control methods are efficient and it helps the operational side of it as well. Then you look at all the operational scenarios. What are the operational scenarios? So before you implement a fixed financial control strategy in an organization, you need to evaluate all possible operational scenarios, right? So look at the policies from the perspective of different operational scenarios, such as profitability, expenditure, safety and scale of production or volume, but all the other information which are necessary, you can look at them. So apart from that, you also need to establish an effective financial control policy that will cover all the operational aspects of the organization. So whatever the policy that you are going to implement, it must address the operational aspects of the organization as well. Okay, Shannon, are you there, Shannon?
Yes.
What do you understand by this term, analyzing all possible operational scenarios? So if anyone else knows the answer, can also raise your hands and I will ask you to unmute. You can answer. Right? Shana, you can answer that question.
No.
Anyone else would like to answer that? Dan? Shana,
Yes, ma'am.
yeah. Dan, what do you understand by analyzing all possible operational scenarios?
Operational scenario, what I understand is while operating the business, we have to study the market and analyze the consumers.
Mm-hmm. Yes.
And demand of the like market as per demand, then only we have to implement this like implementing like goods, something like that,
Yeah, good financial control policies, and that will help the operational aspects of the organization as well. Whatever the financial policies that the company is implementing must help the organization's operations as well, right? If not, it's not going to be feasible. At the end of the day, the funds or the financial policies should be feasible or should be assisting the operational side, isn't it? Okay, is that clear? Is that clear?
Yes, madam. Yes, ma'am.
Okay. So the other point is forecasting and making projections. So this is very important when it comes to financial controls, right? We need to, when we are implementing any policy. Yes. Yeah, Peter. Peter, you have raised your hand.
Yes. I just want to bring to your attention that I will not fully attend the class today.
Yes, I saw your message.
Hello?
Yes, I saw your message.
So there is serious, there is serious unrest in our country, and the internet is on and off. So I will not fully attend classes today.
Okay, Peter. All right. You have the notes with you, right? If you have
I
any
am currently online, but anything can happen at any time that we prompt the internet to be off, because they are using the social media to spread out the information for the strike.
Oh, okay, okay. Sorry to hear about that. Anyway, take care, Peter. Okay. Right. So, so in terms of forecasting and making projections, so that's also very important in terms of financial controlling process. When you're implementing any kind of like a financial policy, you need to make a forecast and make certain projections, which are important steps. Now, you might make a sales forecast. You might even make projections with regards to your finances. So they are very important, right? Because you don't know actually what you will get, but you have to make a forecast. If you like it's like giving you a future, sort of like an insight in terms of the future goals and objectives of the business as well. So it will also help in the long run when implementing financial control policies, which are in line with the objectives of the company. Lydia, before I give the break again, I will be sharing the lesson notes, right? Everyone who walked in late, I'm going to share the lesson notes before I give the break. All right. So the next important thing is cash flow maintenance. Right? What is cash flow maintenance? Can someone tell me what you understand by cash flow maintenance? Yes, I'm waiting for someone to answer.
Hello, ma'am.
Yes.
Yeah.
Hi,
Cash
Walter.
flow. Hi, how are you, ma'am?
Good, good.
Right. Cash flow maintenance, I think, are the control measures that helps to have good management of the finances that come within the business proceedings.
Yes. So basically, what comes in to the organization and how it goes out, if it's managed and planned and if it's monitored well, that will help your operations as well. If you don't know what is the cash that's coming in, you don't know how it's used, you have no plan, then it's very difficult for you to manage your operations because you don't know how the funds are being utilized. Then you have to manage your resources as well. That's the other thing. Resources are the key thing, right? That's the most important thing in an organization, the core, right? If you don't manage your resources properly, you will not be able to gain profits. You will not be able to expand your market share, right? So you need to, apart from financial management, you need to take good control of your resource management as well. Then operational efficiency. What is operational efficiency? You have to see overall how well your organization is operating, the operational aspect of the company. Is the company bringing in profits, right? What is the profitability of the organization? Is it the operational efficiency will also lead to smooth functioning, whereby you will gain more profits. It will help you to gain more profits because it will help productivity. It will also give a good direction. It will also enhance the relationship, or positive relationship with the people who are working within the organization and even outside your customers as well. So effective financial control measure also improves profitability in any business, right? So if you plan your finances well, it's directly linked to profitability. You manage your finances well, you can manage your resources well. You manage your resources well, it will help you in terms of operating efficiently. When you operate efficiently, your productivity increases, hence it will give you more profits. And also fraud prevention. What is fraud prevention? Okay, who likes to answer this question? Anyone? What is fraud prevention? So any kind of fraudulent activity that could happen in an organization, prevention is that preventing those unethical or fraudulent activities, right? It could be employee fraud, online theft can happen, and others, many other fraudulent activities that can happen, but you can monitor it and control it, right? You can monitor it. Especially when it comes to inflow and outflow of financial resources, there could be fraudulent activities that are taking place. So it is the responsibility in terms of controlling the finances as well. You need to take, it will help in preventing the fraud activities that could, fraudulent activities that could happen in an organization. Then here are some examples of financial control in place, right? So overall financial control in management. Some examples of overall financial control in management will include hiring the right people. Now look at this. You need to have the right people with the right qualifications, right? If it's financial, it has to be people who are possessing the right financial qualifications, staff working who are formulating or implementing financial management policies. So you need to hire the right people there, right? You need to also establish a direct chain of communication among the accounting staff and the financial managers, and also going up to the higher management, even the chief financial controller as well, because you need to hire people who know the policies and who are qualified and who have the experience, and they need to have good communication with the top management, because investors, financiers are all dealt with at the top level. Right? And then, so periodic training sessions, we're still on examples of information sessions among accounting staff, because generally it's accounting principles. There could be new softwares which are introduced, more efficient ways of doing your job. So you can have training sessions or maybe sharing information. Remember, I told you, you need to implement your plan and then relook at it and maybe do some adjustments. And also one thing you can include is having good training sessions to the staff, right? Because make sure that they are regularly updated about certain laws that are changing, right? Which involves with the dynamic or changing business environment, especially when it comes to finances. So this periodic financial analysis, evaluation of financial ratios, statements, wherever fluctuations are significant, you need to look into those, share information, provide your staff with the right training. Delegate certain duties to the right people as well, so that the right job is done by the right person, right? Okay. Up to what we discussed, anyone can answer this? What do you understand? Give me an example based on financial control in an organization. What steps can you take? Any volunteers? Why is it important to give training to staff on these matters? I've made the question easier. Yes, Margaret.
Hi, good evening, everyone. Just a second. Sorry. Actually, this is a very, very important to start the business. First of all, you have to train your employee or your team. Why? Because delegation with control. Okay, this is one of the important, that your team knows what they are doing. Where is the target? What is your standards? What is, there's a lot of things before we hit the floor, something like before we open, we call it like that. Before we hit the floor or before we open, we need to let them train and set a standard. So even it's new or old, people will come, same exactly standard what they will do. No personal standard, no other standard, company standard we need to follow. Yeah. Then training, because these people, some of our employees is slow performance. Some of them is easy to catch. So in the training, we will know, and we will teach them in advance. So at least your employee is ready to face the client, the guest, whoever it is. So because your employee is represent the company.
Yes.
Okay, so whatever they mistake is your mistake also. Manager's mistake, the owner's mistake, or the company itself. So we should be a proper training is really, really a must to have. It's not like, okay, I joined the company and then after that, I know everything. No, I don't know anything. We still go back to zero. Even if this is your expertise, no. Every company has a other standard. It's not my personal standard, company standard. Correct? So even in the hospital, I know these things. No, you don't. You should learn. What you are not the one who will adapt, not the old one. Forget about your past. I always say to my my employee or my team that forget about what you learned there. This is their standard. Okay, we will do other standards, something like this. So this is very, very important that I learned for this past years that I implementing the business. Like training, lack of training, lack of knowledge, might the business go down.
Yes, of course. It's very
Thank you.
important. Right? It's an ongoing thing. It's an ongoing thing. Always ongoing training is important. Yes, Peter? Peter, we can't hear you. Okay, anyone else would like to add on something? Dan? What do you think about training? Dan?
Yes, ma'am.
What do you think about training for, we discussed about the importance of giving training sessions to the financial staff, keeping them updated. What do you think? What is your take on that? Rinshin, after Dan, you can answer.
Okay. In my point of view, giving training to the financial team is very important, ma'am. Because in order to control and in order to do a ethically system, and it might be they will manipulate something like data from the organization. So it's very important, and also it's very important to give a training to how to handle the data of the organization.
Yeah, good. Thank you, Dan. Rinshin, yes, you can answer. Rinshin,
Oh, yes, madam. Good evening.
good evening to you.
Actually, in any organization, I felt that if we have a trained staff or giving a training for the staff, that can lead or flourish the company in a better way than having a staff which are not trained or not giving any trainings. So particularly like having a new kind of organization where if you have a trained staff, that trained staff will have a lot of experience. When that experience are put into action, so then that will lead even a new company which is starting a new business, that can make them, that can flourish that company faster than a company who has been set up but without any training for the staff. So that is what I can say about the
Yes.
importance of training, madam.
Yes, very good.
Thank you.
Thank you.
Thank you.
So moving on to still on examples of financial control. So let's look at cash flow. You know what cash flow, right? Cash flow is cash which comes into the company. You need to have a stringent credit reporting policy for all customers before entering into credit debtor relationship with them. You need to have that in control. Otherwise, sometimes you will end up not getting the cash. Then periodic reconciliation with bank statements to the general ledger, in addition to annual reporting for more efficient financial control, establishing like a review process, ensuring that the credit worthiness of customers is what is the credit worthiness, support files and backups. So whatever cash that is coming into the organization, you need to take control of it and keep account of it. That's very important. Also cash outflows. Similarly, what are the funds which are leaving the company, right? Do you have any subscription payments? You need to monitor them. You do have a vendor database, right? With all the purchase details, because otherwise if you don't have a record of it, sometimes they might end up not making the payments on time, and that's going to be bad for your cash stability. You might have to speak to banks and have going for reconciliation to the ledger, then clear, precise expense reimbursement policies. All those you need to do while you're taking this into control. Now we are moving on to importance of management. Before we move on with importance of management, I think it's time for us to take a quick break. 1 second. Let me take a quick time check. So it's Singapore time. So before I go into that, I'm going to share the lesson notes again for everyone who has been asking for it. I said just before the break, I will share. So I'm sharing it. The time is, hi Lydia, hope you got your notes. It's 11:20. So we come back in 15 minutes, it will be 35. 11:35, you have to come back, okay? So take a quick break and be back. All right? Okay, Nursala, is it okay? All right.
Yes.